Financial assets are massively mispriced compared to Bitcoin, and very few people understand this. Humanity has become absurdly productive and advanced over the last 200 plus years. We learned to fly, then soon landed on the moon. We invented the telegraph, then soon created the internet. With all of this innovation, we haven't been able to properly save. Any asset that we hold today can be debased through additional production or devalued by free market competition. If we hoard real estate, we incentivize the production of more houses and apartment buildings. If we hoard big tech equities, we incentivize high growth, early stage companies that burn capital just to grow revenue. And if we hoard bonds, we ultimately help finance big government and misprice the cost of capital for the entire global financial system. Because we couldn't save in an immutably scarce asset, we resorted to hoarding a bunch of semi-scarce assets that shouldn't be hoarded. For example, we're hoarding real estate up to unlivable prices, endlessly buying tech equities despite monstrous valuations, and we even bought up negative yielding bonds. We unlocked immense wealth from unimaginable technology advancements, but we had no idea where to put this wealth. This caused humanity to invest in everything, ignoring the valuation or price of everything. Thankfully, we can now save Bitcoin, the one best monetary tool that nobody can print more of: immutable absolute scarcity. If you want the ultimate passive investment, a global human productivity index fund like return, or a diversified portfolio of everything, you can now just relax and buy Bitcoin, a money where the yield is an internal decrease in prices due to the free market competition and advancing technology. Any wealth you store outside of Bitcoin is a bet that human ingenuity and technology won't find ways to produce more of it or devalue it. Now, the core of this argument is not just speculation that we'll eventually discover more efficient ways to mine gold, build houses, or manufacture and sell GPUs, although all of those are likely. It's that unlike Bitcoin, savers of those assets or owners of those assets must face the possibility that their supply will continue to increase in the future, or creative destruction will devalue the present value of their future cash flows. As these asset holders begin to recognize these truths and begin to understand that Bitcoin is a superior alternative because it most certainly cannot be debased and it touts the necessary properties of good money, then the price of those assets relative to Bitcoin could begin to fall significantly even before any massive supply increase or creative destruction occurs, just from a few holders cashing out for Bitcoin. Markets are forward-looking. If Bitcoin is going to be more resistant to debasement compared to gold, real estate, or other assets, even if it occurs very slowly, then you should still cash out to Bitcoin sooner rather than later. That's why Bitcoin has a compound annual growth rate of 98% over the last 13 years. The world is rushing out of inferior assets and funneling capital into the apex form of property. Your wealth is melting. Buy Bitcoin. Earlier this year, I published a 37-page report on this idea titled Your Wealth is Melting. If you want to read it, the link to download the PDF will be below this video. But thanks for watching, everyone, and see you next time.